Markets continue to inch higher. The Nifty reaches 21,700 briefly. Sensex jumps 600 points. Broader markets mirroring gains of the benchmarks. All sectoral indices in the green barring media. IT and realty emerge as the top gainers while Z drags Nifty media lower. We told you first and it's now confirmed. Z says it is committed on its merger with Sony. Adds that article on Sony ending the $10 billion deal is factually incorrect. And a thumbs up coming in from OMCs after oil plunges as much as 4%. Saudi cuts oil prices to counter Middle East worries. And a stellar rally in Adani Group stocks. Their market cap hits the 15.57 lakh crore rupee mark. Good afternoon. Thanks for staying tuned to NDTV Profit. You are watching Large Trade. I am Hersh Sayta. We'll quickly first take a quick check on markets. You're seeing the Nifty just below the 21,700 mark, around 0.4% higher. Absolutely nothing to complain about as we've reversed some of those losses that we made in trade yesterday. We're looking at broader markets largely mirroring the benchmarks. You're seeing good gains across Nifty mid cap as well as small cap. In fact, the Nifty small cap is up around 0.9% as we around 0.8% as we speak. The Nifty small cap 250, the Nifty small cap 100 up around 0.9% or thereabouts. You're looking at pretty much all sectors in the green. Let's quickly look at the sector chart if we can. The Nifty media is down around 2.3 odd percent. But other than that, across the board, it's a secular green. Let me also take it to the advance decline ratio, strongly in favor of the advances. I would suppose that has been the order of the day. There you go. At least a 2:1 in favor of the advances where the advance decline ratio is concerned. Focusing back on the sectoral pack, let's look at two key sectors. One is the Nifty media, largely dragged down by Z. Of course, on the back of that Z news, Nifty media is trailing lower. But let's take a quick look at constituents. There you go. That's a much improved list from what we were seeing around half an hour or so ago. But nonetheless, you're seeing Z with a cut of 6 odd percent. Dish also seeing a cut of nearly 3.5% in trade today. So that one's in focus. Also, the Nifty realty. This one has been on a spree, the Nifty Realty Index, and that continues to be the case, except for just two constituents in the red. You pretty much have solid gains across the board. Godrej Properties, DLF, Oberoi, all of which are clocking nearly 3+% of gains. So therefore, Nifty Realty continuing to gain ground. That's been the story of the day. With regard to some specific counters which have been in focus, let me take it first to Bajaj Auto, 2% higher. Buyback continues to be in focus on the back of that. GMDC, more lignite production which will come through. Expect top line growth to come through, 6.5% higher as we speak. SBI Life 3+% higher. December numbers showing good growth. Fino Payments 2.5% higher. Applies for a small finance bank license. That one's in focus as well. Gensol, IRB Infra, solid set of numbers, 26% growth clock for the month of December, 10% higher on IRB Infra. So those are some of the names in focus for today. But let me quickly take it to Z. We have the latest updates on the Z-Sony deal. Sources had earlier told NDTV Profit that good faith negotiations are still on. Z has now come out and confirmed that they're committed to the merger. They've confirmed it to exchanges after BSE, of course, asked them for a clarification on that article with regard to the merger, and they've come out and clearly confirmed that they're still in talks. That deal is not off. Most analysts on the street also believe it's a win-win for both parties. You saw Z, the stock being beaten down in trade early on in the day. It's made a bit of a recovery, but not a full recovery. It's still trading down by around 6% or thereabouts. Let's also listen in to what Karan Taurani of Elara Capital, I beg your pardon, had to say about the impact on the stock in the case the merger talks fall through. Listen in.
The deal getting called off is too far-fetched in our opinion. We believe that there's a low likelihood of this happening because firstly, the deal is of equal importance for both Zee as much as for Sony because the landscape is changing. RIL Disney deal is approaching closer. Secondly, we don't foresee that just because of one condition of, CEO norm or a condition by Mr. Puneet, we don't foresee that the entire deal would be put at risk because a lot of shareholders, investors are involved here as well, and his holding in the company as an owner is about 4% odd. So again, there's a very low likelihood event. We believe that at the end, eventually the deal will go ahead in favor of both the parties.
Right, NDTV was the first to break that. We are Tamanna who broke that news, and we will continue to keep you on top of it. So stay tuned here on NDTV Profit. But let's skip ahead. Major news update. Bajaj Auto announced that its board has approved a 4,000 crore rupee share buyback with shares priced at 10,000 rupees each. We have Tushar who's joining us with all of the details on that one. Tushar, take it away.
Good afternoon, Harsh. Thank you for that. So the Bajaj Auto stock jumped about 10% at the open today and has now sustained the gains at about 2% up at this point of time, imparting the company a market capitalization of more than 2 lakh crore at this point of time as we speak. So essentially, Bajaj Auto has approved about 4,000 crore share buyback. That's second in as many years, where shares will be purchased at rupees 10,000 a piece, which is almost a 40% premium to the current market price of the company. In volume terms, the buyback is 1.41% of the total number of equity shares, which is, we see as analysts are saying, it's a bit on the lower side. In value terms, the buyback is 16.33% of the total paid up capital of the company and is 14.49% of the free reserves as of March 31, 2023. What we have to now watch out for is the acceptance ratio of the buyback. So the total acceptance ratio is coming out to be 1.41. Again, it's a bit low on the lower end. That, according to our calculations, the retail portion has acceptance ratio of 3.90% and general at 1.27%. So if you are holding 100 shares of Bajaj Auto as of now, what will you get? You're looking at making up, if you tender, also remember this is actually a tender offer that the buyback will be conducted as. You are stated to gain at least 11,755 rupees if you have 100 shares at this point of time. You'll be able to you'll be able to tender 3.9 shares in the buyback. Now, there are a few concerns. First of all, the acceptance ratio is low. We have seen past buybacks especially by IT companies, which do it fairly regularly, which is at about 2 to 3%. We don't know whether promoter participation will happen or not, which is most likely that it will happen. The share had, now the thing is, most people are seeing that this is also a way to shore up the company's share price going ahead. You have to also remember that almost the share value has doubled since the company announced its previous buyback a year earlier. So essentially, a positive for the stock, as we have seen so far, but we have to wait for more management commentary on how this particular thing will pan out, and I think it should happen in the next couple of months or so. Harsh.
Right, a bit of a wait and watch on some of those metrics, but of course we'll stay tuned and we'll keep our viewers updated on that one. But let's shift focus onto some of the large trades that have happened today. Nykaa in focus on the back of a couple of large trades that have happened. We have Mahima here who's going to talk to us about what those trades are all about and how the stock has really performed. Mahima, over to you.
Right, Hersh. So as you rightly mentioned, couple of large trades. Yesterday also, Nykaa, there was a large trade that took place where 10.2 lakh shares were exchanged, and that call takes up to 0.04% of equity at a price of 177.4. Today also, 12 large trades have taken place in Nykaa, where these are worth rupees almost 32 crores. And if you talk about the number of shares that were exchanged today, they stand at 2.6 crore, and the highest price price at which the shares were exchanged today is at 191.25. If we talk about the stock performance, the stock has been up most today in 7 weeks, and the trading it's trading at a volume of 8 times its 20-day average, and the stock has been up 10% in 5 days, 9% in 30 days, and 22% in the past 52 weeks.
Right. Thanks for that, Mahima. But, from the bottom, we've seen Nykaa share price really surge. We've seen 50+% in terms of returns. Talk to us about two pieces here. One is, how has the Q3 performance been? And second is, what are brokerages now saying? Because you've seen a good bit of correction in the stock price. What are the views like coming through?
Right, so its Q3 business update came in yesterday, and if we talk about the business update, its BPC NSV growth remained robust at 20%. Its GMV growth was higher at mid-20s, and volume growth has been healthy and consistent. Nykaa Fashion also witnessed a strong growth in Q3 FY24. Now, we had two brokerages that are bullish on Nykaa. We had HSBC today on Nykaa, because of which the stock has been buzzing. One of the reasons why the stock is buzzing, it has maintained a buy rating and it has raised its target price to 250 rupees with an upside of 44%. The upside is huge, and it expects that the BPC e-commerce market will grow at a 20 to 30% CAGR in the coming years, and it expects that revenue will double every 2 to 3 years for the next 5 years for Nykaa. We also had a City note yesterday on Nykaa, which says that Q3 performance has beaten the expectation across BPC and fashion verticals, and it raises its estimates to 20% and 32% year-on-year in BPC fashion and NSV growth, and it also expects that Q3 EBITDA margins will grow at 6.7%. So overall, brokerage views are also bullish for Nykaa.
Very, very interesting, Mahima. So after that kind of a rally, we're still positive. Brokerages are still positive on Nykaa. So yeah, we'll keep our eyes skewed on that one as well. But let's switch focus from Nykaa to Narayan Hridayalaya. Now, we spoke with the management. What they are seeming to suggest is profit is the last thing on our mind. That's the word coming in from Viren Shetty of the company. In a conversation with NDTV Profit, he explains how people with chronic diseases can be covered in the long term through insurance. Listen in to a slice of that conversation.
At this point, profit is almost the last thing on our mind. The most important thing for us is to prove to ourselves that this is something we can do. More health, less insurance. If you run it as an insurance company, obviously you're going to do things like deny people with pre-existing conditions, find any reason to deny a claim. But we are in the healthcare business, and we want to offer healthcare to all our customers. And we have a belief that even with someone who has a surgery, who has diabetes, who has a chronic condition, that condition can be managed. Now, it may be more expensive, it may require a lot more work, but that's what we as a hospital organization know how to do. And so if we're able to price it appropriately, we believe that even people with pre-existing conditions can be insured and taken care over long periods of time.
Right, that's the management of Narayan Hridayalaya. Of course, they've moved into the health insurance space with an IRDAI approval that came through over the weekend. Stock in focus up 1% in trade today. But time to take a very short break. Stay tuned. We'll talk about more buzzing stocks as well as large trades on the other side. Stay tuned to NDTV Profit. Welcome back. You're watching Large Trade on NDTV Profit. Let me quickly take it to where markets are. Slight bit of cool-off seen on the Nifty. You're up around 0.2%. Nonetheless, again, nothing to complain about. With regard to where the advances, positive contributories versus negative is at, you're still seeing negative contributories on the Nifty being just 11. So 80% of the stocks largely positive that we are seeing. Among the top gainers, you have the likes of an SBI Life, and Adani Ports, a Hero MotoCorp, and Adani Enterprises, all of which are gaining 2.5% plus in trade. SBI Life on the back of the December numbers, and you're seeing solid gains because the December numbers were very, very healthy. 20% growth on the total premium front, which SBI Life has clocked for the month of December. Also, we had one quick large trade which I want to flag off is the likes of an NHPC. Very small with regard to the percentage or the quantum of the market capitalization, just 0.01%. But this is, of course, a government-owned entity, and therefore the free float is largely capped. I'm also going to try and pull out some numbers for you because this one has really run up over the last year or so. We've seen the stock going from sub 40 to where it sits currently at 71 rupees a share. It's always maintained a healthy dividend payout. My guess is it'll continue to do so, largely because of it being a government-owned entity. You're looking at good sales growth across the last 2 odd years of around 25%. But essentially what's really giving the stock a kicker is the fact that there's a huge shift towards renewables. And there's also a big positivity when it comes to they're virtually going to double up with regard to its power generating capacity, which will start to turn around or start to reflect on top line as well as bottom line going forward, and also generate free cash flow because incremental investments are lower. The balance sheet overall looks decent. There's roughly less than 1:1 debt to equity. So definitely that's one positive that one would want to take home. So that's NHPC for you. Quickly moving on, we also have the likes of a Brigade Enterprises, another stock that hit an intraday high as it inks a large trade by signing a memorandum of understanding with the Tamil Nadu government for 3,400 crore rupees. Anushi is here to break down the details for us. Anushi, take it away.
Right. So with Brigade, if you see, the stock not only did hit an intraday high of about 6.4%, it also marked a new 52-week high. So if you look at the volumes, that traded at about 2 times its 30-day average. This was on the back of the news that you mentioned about the company signing a memorandum of understanding worth rupees 3,400. But let me just break it up this for you. So there are 2 MOUs. One is for the Chennai Metropolitan Development Authority to expand a presence in Chennai with rupees 2,000 crore investment and setting up 2 high-based residential buildings in its IT belt. And the second one is the ELCOT IT and Digital Services Department's investment of rupees 1,400 crore to build commercial and residential developments over there. Now, if we go ahead, we still await for the Q3 business update for this company. But Motilal Oswal recently came out with a report on its Q3 preview, wherein they expect about 24% revenue growth and its margins touching about 26%. Also, they see about 39% uptick in its bookings for the upcoming quarter 3 on back of the 2 million square feet launch that they did in Bangalore. Overall, stock performance-wise, if we look at it, was the second highest stock performer in the Nifty Realty Pack by being about like 112% up in the past year itself. Just to end it on what happened last quarter, the average realization, if we look at, that was up about 9% on a quarterly basis at rupees 7,466 per square feet compared to 6,835 square feet in the Q1 of the quarter. And if you look at the pre-sales, that were also about 25% up on a sequential basis at rupees 1,249 crore. So that is all on Brigade for today.
Right. Thanks so much for that, Anushi, for taking us through some of those details with regard to Brigade. But our final large trade, we have in focus GMDC. which is Gujarat Mineral Development Corp. The stock is trading on high volumes, has reached an intraday high of over 11%. Nykaa is here joining us with regard to the large trade as well as with regard to what's keeping the stock buzzing. Nykaa.
Yes, so the stock did hit an intraday high of 11.32%, and the stock is up 19% in the past month and 23.41% in the past year. Now, volumes were at 3 times its 30-day average, and the total volumes did stand at 1.74 crores, and the highest volumes were at a price of 480. Now, the surge in price was on back of two developments. One was the large trades. There were 4 large trades, and the total trades were over 25 crores. Around 5.2 lakh equity shares changed hands, and the highest change in shares was at a price of 501 crore. And the second was the company has now received the environmental clearance to expand its lignite capacity. Now they are going to expand the lignite capacity at their Surkha plant, and the proposed expansion is to increase it from 3 million tons per annum to 5 million tons per annum. Now this expansion is going to drive substantial revenue growth for the company, and even for Gujarat state's growth as well, as GMDC does play a crucial role as Gujarat's foremost mining entity.
Right, thanks so much for that, Nykaa. That one's trading at its all-time high as we speak, of course up and away, GMDC, and a couple of positives coming through as well. But let me quickly flag off some stocks which are buzzing on the back of solid volumes. We have the likes of Johnson Controls. 8 times its 30-day average is what the stock's volumes are currently at. You can see the spike in the stock, 5% higher on the back of that. You have the likes of an Ashoka Buildcon as well, 7 times 30-day average volumes. And you're seeing the spike there as well, around 9.5% higher on that counter. Polycab India also, you have again roughly 7 times along with Trident, if I can flag that off. But Polycab is down 9% or thereabouts. Trident also trading at around 7 times in terms of its volumes, up around 2.5%. Galaxy Surfactants is trading at around 6.5 times its 30-day average volumes. And another one, Borosil Renewables, also solid volume, 6.5 times 30-day average, that one as well, 7.5% higher on Borosil Renewables. So across the board, those are some of the volume buzzers that we're seeing. Let me quickly move on though, onto a market voice. We spoke with Malabar Investments, Sumit Nagar of Malabar Investments, on what lies ahead for the broader markets in 2024. We've seen broader markets do extremely well through 2023. And he's here to give his say on what's in store for 2024 for the broader market indices.
What we saw in the markets in 2023 was sort of rising this wall of worries. I think when we started the year, I think 2022 wasn't a good year, and there were a lot of worries that existed in the beginning of 2023. And slowly as they receded, the market sort of continued its climb up. If you look at today, I mean, we think the market is reasonably well poised, right? So on the one hand, you have many positives, right? You have economy that's doing well, it's sort of gathering further pace. Your interest rates that have probably peaked out and they will come down. Macros are generally good. Commodities are benign. So these are all sort of good factors for the market. But on the other hand, you also have this worry of valuations being high globally. Maybe some sort of correction may happen. You've had such a steep rise in interest rates. Something somewhere breaks. There's slowdown or recession that people have been talking about. So these are the things that are the cause for worry. But the biggest one is that the markets are always forward-looking, right? So last year, even as things weren't that great, as they started to improve, markets already moved up. So some of this positive is already priced in, right? So where does that leave us? We think that there's still probably further upside because, as you pointed out, the rally only started in the last 2 quarters of the year, right? Just to point out, right, in the 18 months that ended in March 2023, we saw a massive amounts of foreign capital outflow, right? More than what we saw during the financial crisis. And it's only since April that foreign capital has started to come back. And what has come back is only maybe 2/3 of what had gone out. Right, so there's still some of that capital has to come back, and probably more, right? Because, as you said, that India is becoming more prominent, people want to put more capital in. So these sort of flows have a momentum with them. They run for a period of time, and so that will likely continue for some more period, unless something big breaks somewhere. I think so. That's what you're seeing. But at the same time, I think the easy money of rising tide. Raising all the boats, I think that's probably over. So now it will be sort of more selective. Wherever you see good performance, companies delivering earnings and cash flows, that's where you may see the upside, right? So that's our view on the market.
Very interesting take coming in, that one. But with that, we're completely out of time on this edition of Large Trade. From everyone who puts the show together, as well as myself, thanks so much for watching. India market close on the other side, so stay tuned to NDTV Profit.
there is a palpable fall in banks, which is leading the markets lower. Welcome to India Market Close. I'm Neeraj Shah. And look at the Nifty Bank. I think this is the culprit. I'm glad we're starting with this screen. But the intraday would be even more interesting. It's down about 100 points. But the chart will come up to your left in just a moment from now. And you will see how the Bank Nifty completely dragged the Nifty lower. Look at this. The high was 47939. The day's low is 47273. And we are at the day's low. By the way, at 47273, we are below that mark that everybody's talking about, which is 47,500. But a very sharp gash in the Bank Nifty, which is leading. And what could be leading this, by the way, just before we come to the mid caps and small caps, bring up the HDFC Bank intraday, bring up the ICICI Bank intraday, and in the similar pattern, we'll get to know why the Bank Nifty is doing what it is doing. Look at that sharp gash at 1677. There is serious, not serious selling, but a serious pressure from the intraday highs for HDFC Bank. And I think something similar could be witnessed in ICICI Bank as well. I reckon it's 938, still in the green, but look at this fall. So I don't know if Fin Nifty expiry has got to do something with this, but clearly there is some pressure on the banking stocks. Now bring up the mid caps and small caps and see what's happening there as well. The indices per se, and you will get to see whether this pressure is percolating into the broader end of the spectrum or no. About 1/3%. The Nifty mid-cap index started off about 0.8%. What about the small caps? That will come up on your screen as well. And while the Nifty and the Sensex are still about 0.5%, the small cap index from 0.9 is now up only 0.55%. So clearly, the market breadth, I reckon the advanced decline ratio would have come off a little bit from what it was for a better part of the trading day, right here on your screen. It's not a convergence, but you can clearly see some bit of a pullback here. Now, this could be technical.